Let's talk about the housing market. According to Redfin, Americans stopped buying homes leading up to the election due to the uncertainty, and then after the election was decided, Americans finally started buying homes again. But the question is, with mortgage rates back at 7% and housing prices near record highs, is this a good time to buy a house? And the reason I wanted to make this video specifically is because out of the last 10 podcasts that I did, every single host asked me the same question: should you buy a house right now? So I want to break this video up into 3 different parts. Number 1, should you buy a house right now? Number 2, where is the housing market going next? Because this is what everyone's trying to figure out. And number 3, tips if you are thinking about buying a home on how you can save some money when you're actually buying a house. Now, let's start with number 1, should you buy a house right now? But first, here are a few words from my sponsor, DuckDuckGo. Look, not overpaying on your housing costs is important, but so is not getting my information stolen by hackers, which is why I'm excited to tell you about Privacy Pro, which is a 3-in-1 subscription service from DuckDuckGo. First, you get the DuckDuckGo VPN. The way it works is you click one button and then secure your Wi-Fi connection on up to 5 devices. And it also hides your IP addresses from the sites that you go on. I travel a lot, so I spend a lot of time working in cafes and airports, so this comes in handy. Second, you get identity theft restoration, which is a service that helps you restore your identity if it gets stolen. And third, on desktop devices, you get personal information removal, which helps you find and remove your personal information from data brokers on the internet. That includes removing things like your name and email. But don't just take my word for it. Try it out for yourself with a 7-day free trial, and that is $9.99 a month or $99.99 a year after that. And if you want to give it a shot, you can take a picture of this QR code right here, or you can use my link down in the description below. Now, to answer the question of should you buy a house, the first thing you want to understand is, what is your home? Is it an asset or a liability? And the reason why I bring this up is because I have seen the housing market from multiple lenses. I am a licensed realtor. I am a licensed attorney. I'm a real estate investor. And the problem that so many people make when they go out to buy a home is when you talk to your realtor, you talk to your banker, they tell you that this home that you're going to buy, this house that you're living in, is your biggest investment. It is your biggest asset. And so you definitely want to buy a little bit bigger, a little bit nicer, because this is how you're going to build your generational wealth. That's what every realtor, every mortgage banker will tell you. The problem with that is, if you look at any wealthy person in the world, they never talk about how they became wealthy because they paid off their house. They talk about how they became wealthy because they invested in businesses, because they built a business, because they invested in rental real estate, because they invested in stocks. That's how people become wealthy. They don't become wealthy because of the house. Now listen to what I'm saying. I'm not saying you shouldn't buy a house, but you have to understand if your house is an asset or a liability, because the reality is your house is a money pit. It is a liability until you sell it, and then maybe you make some money, but it is a money pit until then, and there's no guarantee you're going to make any money, which is why I want you to treat your house like a liability, not like an asset. When I think about buying a house for me to live in, I want to make sure I can afford it. That's the key thing. Ignore all the other stuff that's going on, because everybody is looking at their house as a way to make money. That's why people get so caught up with what's happening in the housing market and the economy, because they're looking at this house as how I'm going to build wealth. How much money am I going to make? Instead of, is this the house that I can afford to live in, to make memories in? And that's where so many people get things wrong. And I'm going to take this one step further, because you probably heard people say, oh, if you buy a house for $300,000, it's going to be worth $1 million when you're retired, and you can pass it on to your kids. But the problem with that is, you buy this $300,000 house and it goes up in value to $1 million, you might feel like you built wealth out of this house. But there's a few problems, because number 1, even if you pay off the mortgage, it still costs you money to live there. In fact, it costs you more money to live there now, because your property taxes go up as well. Your property taxes are based off of the value of the property. So if your house price goes up, your house value goes up, so do your property taxes. And if your income doesn't go up to match that, well, now you can't afford the house. You also have insurance to pay for. And as your house goes up in value, your insurance also becomes more expensive. So if you don't have the income to pay for the higher insurance, well, now you might not be able to afford the house. Not to mention, you still have to pay for the upkeep, the maintenance, and the upgrades. So now, even if you pay off the house, as it goes up in value, you have to make sure your income keeps rising to make up for the higher cost of living. And then if you pass this house down to your kids, they get this house free and clear, but now they have to have the income to support living in this house. And if they don't, either they have to do a cash out refinance and then have to figure out how to pay the mortgage, or they're going to have to sell the house and now start this process all over again, Versus if you own a rental property, now the cash flow from the property, the rental income should be enough to pay for your property taxes, your insurance, your maintenance, your upgrades, and put some money in your pocket. That's the difference between real wealthy thinking and the average person's wealthy thinking. That's why I want you to think of your house like a liability instead of an asset. And when you do that, you'll change the way you think about buying a house, because you're not looking at this house as a way to make money. You're buying this house like a liability. When I go and buy a shirt, I don't care what's happening in the economy. I look at, can I afford this shirt? And is this something that I want and need? So now, if you want to buy a house, great. Go ahead. Just make sure you think of it like a liability. And when you think of it like a liability, now you definitely have to make sure that you can afford the house. What does it mean to afford the house that you're going to buy? 3 things. You have to afford the down payment, the monthly payment, and the move-in costs. Let me start with the move-in costs, because this is probably the one that most people completely overlook. When you buy a house and you have to move into the house, it is expensive. And I'm not talking about the closing fees, which are also expensive. I'm talking about actually moving into the house. If you have to hire movers, that's an expense. Factor that in. If you're going to buy new furniture, factor that in. Furniture is expensive. Trust me, I know. My wife and I went to go out and buy a new sofa recently. If you want to buy or upgrade your kitchen or your bathroom, that is expensive. If you're going to finish the basement, if you're going to build a deck, all these things are part of the move-in costs, and you better factor that in before you move in, because you better have the money for it, because if you don't, you are going to be digging deep into your pockets to pay for that. The second thing is you have to afford the down payment. Now, I don't make these videos to get you to like me. I get these videos to help you be better with your money. And the reality is everybody wants to sell you a mortgage. And so even if you don't have the money, they will try to find creative ways to get you in for 10% down, 5% down, 3% down, maybe even 0% down. But if you actually want to be able to afford the home, you want to have at least a 20% down payment. I know that's expensive during a time when housing prices are very high. But if you want to actually afford the home, now look at the down payment and have a 20% down payment, that we have some real equity, you have some real skin in the game to protect you against worst case type of situations. And then the third part is your monthly payment. Making sure that you can afford your monthly payment. Now, every bank is going to have a different calculator. Some banks like to follow what's called the 28% rule, but I'm going to do this a little bit differently. And the way I like to do this is by talking about the 75-15-10 plan you may have heard me talk about in the past. And what the 75-15-10 plan says is for every dollar that you earn from here on out, 75 cents is the maximum that you can spend, 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. That means that you have to be able to live off of 75 cents of every dollar that you earn. And this has to include your mortgage costs, your property taxes, your insurance, your grocery costs, your car costs, your travel costs, your fun costs, your clothes costs. So if you can fit all of your expenses within here, you can afford the mortgage. But this is where you have to make sure that you can continue to pay your mortgage, pay your bills, and still have money to invest and still have money to save. That's the real way to afford your mortgage. It's because you're still having money to invest. The mistake that so many people make is they buy a house so big because the realtor says so, the mortgage banker says they can afford it, and then because you buy a house so big, you don't realize that this is a money pit, and now you have so much money going to pay your mortgage and your property taxes and your insurance that you no longer have money left over to save or invest. And now you're stuck. But you think you're building wealth because you're building this equity in your house, when in reality, all you're doing is paying the bank's interest. Because don't forget, the banks are smart. And the way that they play their game is they front load their mortgages. So if you get a 30-year fixed rate mortgage, the first almost half, 14 years and 8 months or so, are gonna be the majority of your monthly payment going directly into the bank's pocket of interest. So if you're paying $3,000 a month for your mortgage, for the first few months, almost all of that $3,000 is going directly into your banker's pocket in interest. Maybe $10 or $12 is going to your principal. It isn't until year 15 that half of your monthly mortgage payment is going to build equity in your property. 15 years later. But if you refinance it along the way, that clock restarts and the process starts all over again, because the bank wants to get paid first. They front load your mortgages so your bank gets paid their interest first. Now, before I move on to the second section of this video, I want to reiterate, I'm not against you buying a home. In fact, I would prefer you to buy a home. I just want to make sure you can afford the home. And now to understand where the housing market is going, let's take a look at where housing prices are and what's going on with supply and demand in the housing market, because this will teach you what's going on in the housing market economy. Housing prices nationally are still at or near record highs, although we do have some pockets around the country, like in Florida, where housing prices are falling. But even if housing prices fall a little bit, the problem is that we've seen housing prices grow way faster than incomes. Over the last 5 years, between 2019 and 2024, we have seen household income in America grow by an average of 18%, while the average housing cost has gone up by around 50%. We've seen it go up by more than that in some areas. In fact, many areas it's gone up by more than 50%. Some areas a little bit less, but on average, about 50% growth in housing costs, and that's just the cost to buy a home, not to mention higher mortgage rates than where we were 5 years ago. But you can start to see the problem. The cost to buy a house has gone up so much faster than incomes, which is why house pricing is so important. And this is where so many people are paying attention to what's going on with home prices, because people are hoping for a break. And this is where you want to pay attention to supply and demand, because the reality is housing costs, housing prices, like every other asset, follow supply and demand. When you have more buyers than sellers, when you have more demand than supply, that pushes home prices up. When you have more sellers than buyers, when you have more supply than demand, that can pull home prices lower. So let's take a look at supply, and then let's take a look at demand. Number one, we're not seeing forced sales, meaning foreclosures. And the reason why is because home prices have gone up so much. So if you buy a home, the first thing is many people have a 30-year fixed rate mortgage or some sort of fixed rate mortgage, which is different than what we saw back in 2008, back when the great real estate crash happened. Because back in the 2008 crash, many people had a variable interest rate mortgage, which meant that their payments would fluctuate. We don't have that today because most people have a 30-year or 15-year fixed rate mortgage. The second difference between now and then is, let's say you own a home and you run into a financial hardship. You know what your monthly payments are, but you just don't have an income to pay off this mortgage. Now what? Well, back in 2008 when house prices were falling, people had no equity, so now you'd have no option. You couldn't sell. Today, if you run into a financial hardship and you bought your home a few years ago, chances are you could sell your home and walk away with a pocket full of cash. So there's no reason for a foreclosure to happen. This is why we haven't seen a big uptick in foreclosure, and you might have seen some articles talking about how foreclosure rates are rising at an alarming rate. The reason why is because we had no foreclosures in 2020 and 2021. So when you go from zero to some, it looks like a lot versus we're still way below where we were back before the pandemic. Number two, it's not favorable for a lot of people to sell. Yes, if you sold your home, you could probably get a profit, but the problem for a lot of people is they'd have to then upgrade to a much higher mortgage rate. People don't want to do that. 76% of Americans today have a mortgage rate locked in at under 5%. Many people have a mortgage rate locked in at under 4%. So if you have a 4% mortgage, a 3% mortgage, or a 5% mortgage, you probably don't want to sell that home unless there's a real reason to, because then you have to go to a 7% mortgage. Maybe even a 7.5% mortgage. And that's been disincentivizing a lot of people from wanting to sell their home and go to a new house because they're locked in at a low mortgage rate, and you won't get those mortgage rates anytime soon, it seems. And then we have the third part to supply, which is building new homes. And this one is interesting because new economic policies and government policies could change this, but we haven't seen a huge influx of building until just recently because a lot of builders were not sure about what's going to happen with mortgage rates or the economy. And now that Trump is entering the White House, we have a whole new economic plan on how to stimulate the housing market. And we've seen mixed reviews from economists, but of course, we're not going to know what happens until it actually happens. So just take everything that I say with a grain of salt. Number one, economists are saying that Trump's economic plan to remove millions of illegal immigrants will hurt the building process. Why? Because you have a lot of undocumented or illegal immigrants that are working to build houses. So if construction companies lose those workers, it could take longer to potentially build homes. Then number two, Trump has also promised to remove some red tape and regulations to make it easier for builders to go out and build new homes, build new properties, and have more land to potentially build these properties to hopefully increase the supply of homes. And then the third part to Trump's plan here is he also has been promising lower mortgage rates. Now, Trump can't set mortgage rates directly. The Federal Reserve Bank sets the federal funds rate. The bank sets the actual mortgage rate. So we'll see what ends up happening with mortgage rate, where Trump has been promising lower mortgage rate, which could make it easier or more favorable for somebody who owns a home to sell, because they don't have to go up to a 7% mortgage. If you're going from a 5% mortgage to a 5.5% mortgage, it's not as bad of a sell. Not to mention that Jerome Powell also said that he won't leave even if Trump asks him to.
If he asked you to leave, would you go?
No.
Do you think that legally you're not required to leave?
No.
Moving on to the demand side, there are two main factors that influence the demand for housing, and that is the economy and mortgage rates. Starting with the economy, when people feel confident about the economy, then they feel more confident to make a big purchase like buying a house because they're confident that they're going to continue having a salary, they're going to keep their job, the business is going to keep growing. And so we're going to see what ends up happening with the economy, but you want to pay attention to this because if people feel strong in the economy, people feel more confident to buy a house. Same with mortgage rates. We already kind of talked about this in the supply side, but when people have lower mortgage rates, your mortgage is more affordable. Generally, assuming you don't have to go out and borrow a whole lot more dollars, but lower mortgage rates make your mortgage payment more affordable, so it makes the cost of buying a house a little bit cheaper. And we're not going to know for sure what happens with mortgage rates until after Trump comes into office and we see what happens with the Federal Reserve Bank. So I'm not going to go too deep into that. But just understand that lower mortgage rates can increase demand. Higher mortgage rates generally decrease demand, although the higher mortgage rates that we have seen in the last couple of years didn't decrease demand fast enough to cause a decrease in the price of homes, because while the demand did fall, the supply wasn't there either. And the third part of this video that I want to talk about is how you can save some money when buying a house. And the reason why I want to talk about this is because I was on a podcast recently where the host asked me, if somebody wanted to buy a home and they feel like they're priced out, will they ever be able to buy a home? What can they do to ever be able to buy a home? Because young people don't have the money for the down payment and prices keep getting more expensive. And is there ever going to be an opportunity? And I said, yes, but you have to look outside of the box. For example, and this is going to offend a lot of people, but that's okay. Come to Michigan. Our office is in downtown Detroit. Michigan is beautiful. There's a lot of amazing things happening, but do you know what else? If you can afford a $250,000 house, you can buy a nice house, 3-bedroom, maybe 4-bedroom, 2-bath, in a growing neighborhood where businesses are moving into, with a nice downtown. And not just that, when you compare the salaries of a job in Michigan versus New York or Michigan versus California, you'll see that the incomes are not that different, but the cost of living is drastically different. Meaning, if you move out of a high cost of living state and you move into a lower cost of living state, you might take a little bit of a pay cut, but your cost of living might have a huge pay cut, which means you could build more wealth faster, own your house faster, and have more money to invest. And this is where you got to understand, why are you living where you are? Because there are some people that are living in California and New York because they want to make it, because they want to grind, because they have the opportunity in this place. Fine, that makes sense. But if you're there just because, well, that's where you want to be and you want to party and you want to spend money and you also want to build wealth, well, you're kind of not making any sense here. And you got to think about what are the other opportunities. So number one is consider moving from a high cost of living state to a lower cost of living state. Number two, that I always want to highlight, because I've noticed a lot of people talk about this recently, is when you're getting a mortgage, shop around. Don't just go to your banker. Shop around, go online, see what different mortgage lenders are charging, because guess what? Some mortgage lenders are going to charge you less money, less interest on the exact same loan, which means you could save $100 or $200 or $300 a month just by going to a different lender. So yes, it can pay to shop around because some lenders are going to charge you more than others just because of who you're going to. And tip number three is consider buying what other people are scared to buy, meaning a fixer-upper. A house that doesn't look very beautiful, because sometimes these homes that don't look very nice, you can get at a big discount. And sometimes that discount is going to be big enough for you to do a whole renovation to make this home look beautiful and still have a discount on the fair market value of the home. This is what flippers do. Flippers are looking for homes that look ugly, coming in, putting in the money to make it look beautiful, that way then they can sell it for a profit. But you can do what flippers do without flipping the home. You can just live in the home, find an ugly home, put in the money to make it look beautiful, and then keep that money as a discount that you saved by not having to pay top dollar for an already beautiful home. It takes more work, but there's a lot of opportunity there. Buy low, sell high. But what do you do in an economy like today where markets are setting record highs, even though many people are still concerned about the economy, and now investors are hopeful that Trump is going to save the economy and boost the stock market? So is this the time to double down and buy even more? Or is this the time to sell high and cash out of your profits?